Good morning, and today is the 12th of August. It's holiday time, Andy, and the markets seem to be in a bit of a holiday mood, aren't they?
Sure is. It's a gorgeous day out here on the beach, and everyone seems to be on vacation. Certainly next week.
Yeah. Well, certainly the markets traded in a bit of a range last week, the equities markets especially, but the interesting stuff I think is happening in the bond market. We had three auctions last week, and we also had CPI and PPI. And before CPI, we saw a bit of a rally in the bond market, with the short end certainly doing better than the long end. The long end rallied nearly to where we were when the QRA was announced. And that's where we were when CPI came out. And as soon as the lower print in CPI came out, which was expected, the market started selling off, which basically says that it's the QRA that's behind it all. People are uneasy about buying long duration ahead of so much supply coming in the next quarters. And as we've said, it's just not going to get better. It's just going to get worse and worse and worse in terms of supply. So unless there's a very good reason to buy bonds, they're just going to, come back to new lows time after time. And that was very evident, I think, after the PPI number, the first bit of slightly bad news, and down hard they go right back to where they came from when they started speculating about a lower CPI number. So it's one step forward, two steps back for the bond market. And of course, what does that do to equities? It's a huge headwind, especially for the high beta stocks, and we're talking about Nasdaq. So that's exactly what happened all week in the equities. We saw SPX go just about nowhere, finished 13 ticks lower than last week, and we had the Nasdaq significantly weaker, while the Dow did better, slightly better. And as the Dow goes slightly better and the Nasdaq goes considerably weaker, SPX is stuck in no man's land with low volatility.
Yeah, that's my read as well. We've got this pressure on assets, which is going to first manifest itself on the long end of the curve, because that's where the actual supply comes. But that supply has to get bought, and the proceeds of that spend has to come from other assets. And the first thing you do is you sell the high beta, high multiple stocks. And so we saw a multiple contraction across the board, modestly in S&P, but mostly in the things with high multiples. So not a big surprise there.
I think this will come as no surprise to our subscribers. We've been banging on about this for several weeks now, and absolutely no reason to change our mind or change our narrative, and we're not seeing anything different. The market is validating what we've been saying for the past several weeks. We should leave it at that.
Yeah.
What about next week, Andy? What do you think
Yeah,
is
so
likely to
again,
happen?
it's going to be quiet. I think the pressures will continue, but we have options expiration week, which at the beginning of Monday, Tuesday, Wednesday can provide some supportive flows and keep the market from, making new lows. We were on the 50-day moving average on S&P, and that bounced, but Nasdaq is substantially below those technical levels. It's no man's land at some level, and it's quiet. Data, retail sales, we'll see what that looks like. Retail earnings, Walmart, Home Depot, and the like. The FOMC minutes, which, a month ago they hiked in a dovish way. It's hard to think that the minutes are going to be anything more than dovish. So you might get a rally in some things, but certainly nothing worth chasing. Then we have the usual employment data. It's a light calendar. And so The question is, do you do anything about that? Our macro outlook with duration issuance driving all assets and risk off, potentially creating a bid on the front end of the curve, that really hasn't changed. What is a question is, given low implied vol, low options volatility, and a defensive portfolio with minimal equity, minimal long-term duration, except the best high-yielding kind, and high cash, I think it just pays to wait versus doing anything at this stage.
Yeah, I agree with you. I think the what we haven't seen in this market and what we normally see at the end of a move is people getting stopped out. Nobody's been stopped out of anything, and the volatility tells you that. So I think the best thing to do in with our portfolio is to wait. We had none of our options were got traded, got filled, and therefore at this level of volatility, I see no point in selling volatility, rather waiting as we are high in cash for this final push of stops going off and buying those when it occurs.
And we can always mention that to you all during the week if something happens. Next week, we'll talk about also what will be a heavy, at least supply week and Jackson Hole. But for this week, only if something unusual happens, which we don't expect, would we, and we'll notify you if we do, will our portfolio change.
Excellent. See you all next week.
Have a good vacation if you're taking one, and enjoy where you are. Thanks for listening.
Bye bye. Well, as we said, absolutely no changes to our portfolio. This is what it looks like. I've updated naturally the chart pack, and the broker statements are all in here. For new subscribers, all you have to do is click this link and they will appear. The statement will appear. We have the statement with the positions and the one with the activity. And of course, there was absolutely no activity. As we've mentioned, order entry 0. We're absolutely putting in no orders whatsoever, but we will send you an email if we see something interesting. We are basically waiting, as we mentioned, for the market to tumble in order to buy some assets, but nothing's happened yet. And selling volatility at this stage before Jackson Hole, which is in 2 weeks' time, which could be a potential harbinger of volatility, is really not wise. And certainly the OPEX on next Friday tends to unleash volatility after it. So it would pay to just wait in cash, as we are very heavy in cash, around 50%. We are just waiting for the opportunity to arise. Thank you very much indeed, and have a lovely weekend.